Good evening, everybody. All right, we're going to be doing tonight oriented toward the T-line. We're going to be doing a two-day training session on the first. Is the first and the second? No, it might be the second and the third of June. Not this weekend, but the next weekend. The reason for that is we get a lot of people asking questions about the T-line. And I am a strong advocate of the T-line because before the T-line was introduced to me, I was making good money with candlesticks. And I say good money, starting off as being one of the worst investors in the world, just turning that around and making some money was a heck of a lot better than what I had been doing in the past. But then when Rick Sadler, one of my first private training students, came down from, I think he was from Anchorage, and we sat for a weekend. He was just enthralled with candlesticks. And then he got back to me a few weeks later and said, take a look at the 8 exponential moving average, the T-line. And the nice thing about candlestick charts is that we know candlesticks work based upon the signals. Then anything we can add to the chart to improve the probabilities of them working is easy to do. And if somebody says, oh, you should try out something, and you add it to your chart, if it's not working, you can take it right back off. That's why you always see my charts are relatively simple, because the main factor of any trend reversal is the candlestick reversal signal. So tonight I'm going to kind of orient everything that we're looking at using the T-line as kind of the factor, just so you get a feel for what our two-day training is going to involve. And again, the reason I am such an advocate now of the T-line is, as I said, I made good money with candlesticks, but when I added the T-line to my chart, I made great money. So it dramatically improved my return. DK, it depends on, it's neither. You're not at the top. You're not at the bottom. So the hammer occurs when you're in the oversold area. The hanging man occurs at the top of a trend. We're not at the top of a trend. So remember, just because it's a formation doesn't necessarily mean it's a signal. But the formation is very telling if you know what the formation represents. Today, as we saw, the Dow was down a good part of the day. But by the end of the day, they brought it back up. And where did they bring it back up to? Just above the T-line. So the reason I'm putting such emphasis on the T-line is I always use the definition of the T-line as kind of a Fibonacci type number, a natural support and resistance number. Everybody has the 50 and the 200 on their chart. That's why those moving averages act like magnets. Because everybody's waiting to see what it does at that level, whether people are buying or selling. Since nobody has the T-line on their charts, when it supports at that level, it's kind of a natural support and resistance level of human nature. So if you put the combination of candlestick signals or formations, which is the graphic depiction of human nature, and you add the T-line, which is kind of a natural support and resistance level of human nature, when you combine those two, you've got a tremendously high-powered, high-probability trade setup. Not to get on your nerves or anything, could you give us a percentage between good money and great money? Jack, not that I know of, not because I'm not telling you, it's just I don't know. I just knew I was making good money as a candlesticks, but when I added the T-line, I mean, the percentage of good trades or holding on to good trades became that much better. So back before candlesticks came along, again, I was one of the worst investors in the world, and I was even a stockbroker for 8 years. I got out of the business because I realized that most brokerage firms have no more idea about what's going to make a stock or a sector go up or down than anybody else. That's why you always see that their advice is you can't time the market. You just buy good quality stock and hold them long term, which is a great strategy unless you're going through 2007, 2008, and 2009. That's right. Great money is $10 to a panhandler. Yeah. So anyways, I don't have anything. Jack, who asked that? Yeah, I don't have anything definitive. I just know the. And as we go through some of this real quick, you'll see that. Kind of the logic that fits with the T-line. The triple T was based upon the T-line, the 3T line, and I hate to say this, Bob, I don't know what the other T was for. We've just been always calling it the triple T. So that's kind of a... Anyways, I'll go on. So what we saw today is you don't have a, you don't evaluate this as a formation or as a signal because we're not at the top of a trend. Had this occurred up here, yeah, now you've got a hanging man. This is just a day where they took it down and they brought it back up and closed above the T-line, and that's the important factor. There's one very simple rule of the T-line. If you see a candlestick buy signal to close above the T-line, you can stay long until you see a candlestick sell signal and a close back below the T-line. Yeah, the 3T is the 3 EMA. Good money, you count in tens, that's right. Great money in hundreds. The T-line is the 8 exponential moving average. And again, nobody has this. I say nobody. The statistically small number of people that have the 8 exponential moving average on their chart is so minuscule you would say nobody has it on their chart. So other moving averages act like magnets because everybody's watching to see what it does at those levels. Because everybody's got them on their chart. Every major money manager around the world has the 200 and the 50 on their chart. Since nobody has the T-line, when it moves back to this level and supports, it's doing it because of natural, I want to say, human nature, not because everybody's saying, no, it's moved back to the T-line. Yes, I can't remember how we came up with triple T. Maybe it was T-line, 3T-line trading or something. It was so long ago. Not so long ago, probably 6 years ago. So anyways, what happened today? They took the markets down and they brought them back up above the T-line. So we've got a very simple analysis of the T-line. As long as you're staying above the T-line, logic says you're going to still be in an uptrend. And it gives you much more clarity as saying, all right, this looks like a J-hook pattern setting up because they pulled right back to the T-line support level and curling back up. So what's the next thing we're looking for? A breakout through this level, which would tell us wave 1 and wave 3 are going to be the same. Yeah, now I've got the, this other line is the 34 EMA, exponential moving average. It just seems to work. work much better. Yeah, Rick also came up with that one, but it was also used more. I trade more futures or commodities during the middle part of the day. It was one that we kind of used over there, so when Rick mentioned it, I just transferred it to the stock charts also. Okay. Can I ask why from the 20 to the 34, I still love the 3, the 8, and the 20? Mike, it doesn't really matter. Now, the 20 didn't get hit as often. Usually the 20 became more effective if you were in a good, strong, steady uptrend. And because I was using the 34 years ago, because it worked better on futures trading, and then Doug Campbell, that works with Rick, a couple of months ago, we had him on, and he kind of reiterated how the 34 worked pretty good. So I just switched it from the 20 back to the 34. Can you show us wave 1, wave 2? Here's wave 1, here's wave 2, here's wave 3. Here's wave 1, here's wave 2. Now we're getting ready for wave 3. Now that has nothing to do with Elliott wave. Because Elliott wave had so many subjective, and he even said it was very subjective. But what the Elliott wave theory illustrated, that prices do move in waves. AKK, we'll get to that here in a little bit. So here's what I want to do. I wanted to show, let me see if I've got some charts that are showing. This is why there was our doji, long-legged doji gap up through the T-line. That told us that the reversal probably had occurred in soybeans, and where was it likely going to occur or head to? The 50-day moving average. I think wheat was the same scenario, except it got up to this resistance level, did a shooting star doji. So what I'm going to try to orient most of our conversation. When we use the T-line, it kind of confirms, I can't even remember how to get sugar up here because I haven't traded it in so long. SBAN. That's sugar. All right, notice your cradle pattern right down here. Now remember, there's about 8 reversal patterns. The cradle is one of them. All it is an extension of the Morningstar signal. I usually use my definition for a Morningstar signal as a down day, 1 or 2 indecisive trading days, and the next day taking it back up. I usually call it a cradle pattern if it's 2 or 3 or more when that happens. So it still illustrates it's like a Morningstar signal, but it's a little bit more extended. But look at the qualification or the confirmation. A pattern that closes above the T-line. And what's our criteria for this one? You stay long until you see a sell signal and a close back below the T-line, with the caveat that the further away you move from the T-line, the higher the probability it's going to come back and test it. So this is going to be some of the things that we're going to be pointing out on our training weekend is we've moved away from the T-line. We've gone through the 50. Stochastic's getting up here. What probably the next logical price move? Well, if they start selling it off, they're probably coming back to test the 50. Because if a resistance level is breached, they'll usually come back and test it to see if it's going to act as support. Are the T-lines on the weekly and monthly? Yes. Whether you're watching the 1-minute, 5-minute, 10-minute charts or the daily, weekly, monthly, the T-lines work just as effectively. So did I do the stocks yet? So this was our recommendation the other day on MDXG, because you could see what happened right here off the T-line. Kind of a, kind of a scoop type pattern. We recommended it on positive trading on yesterday, and it had a big percentage move. So would you take profits at this point, then jump back in after it hits the T-line? If it opens lower, remember the number one criteria, I'm guessing, let's see, I forgot which one we were looking at. Oh, was it coffee or sugar? If I was long sugar, what's our definition or what's our doji rule? If it opens lower and you're up here in the overbought area, you take profits. And you just watch to see if it comes back down to this level. If it bounces back up, you know you've got support and a J-hook pattern. So knowing what should happen after each signal and where it's heading to or where it might head to gives us the advantage of seeing what type of formation or what type of signal occurs once it gets to the levels that everybody else is watching. The third T could be trend, it could be wouldn't you have got out through 10-minute chart before you could. Depends on how fast you're trading. Yes, if you've got a stock that has moved up this significantly, let's see if this works. Yes. Notice what type of pattern you have on your 10-minute chart. There's your big fry pan bottom. Where was it time to take profits? Well, if it was up almost 20, back down to maybe 15%, yeah, you take profits, and what's your next criteria? You can always buy back when it comes back up through that level. Remember, the 10-minute chart looks just like the 1-minute chart, looks just like the hourly chart, looks just like the weekly chart. When trading options 2 or 3 months out, should you still use the T-line or something else to give it time? That's all depends on each individual. So I was going to try to illustrate how I use candlestick signals with the T-line, and because I'm usually picking out what I think are the best trade setups, that means that's probably ones that we've already started trading. So we didn't hear M. All right. Macy's. Macy's, remember, the bigger the signal, the more compelling there's been a change of investor sentiment. Let's see if we can make this a little bit smaller. So now we can see what's happening right now on this. This was kind of the breakout level. And what happens usually when they break out through a resistance level, they'll come back and test it as support. Additionally, notice what it also tested. Came right back to the T-line. So we're in a 45 degree, which is one of the things. Oops. Is Gary, can everybody else still hear me? Is Gary the only one having problems? All right. Oh, Jim, you might tell Gary to reboot. So this becomes a more confirmation that we're going to be in a 45 degree. Anytime I see something come back and test the T-line, remember what our simple rule is. We're buying, and notice the pullback, very indecisive. And what is the one thing that it didn't do? It didn't close below the T-line. This is what keeps us in good trades. It used to be without the T-line, I may have been selling out here because it didn't look good anymore. But now I know to hang on as long as it doesn't close below the T-line. So I think Cato was up like 20-some-odd% today. Micron, same scenario. When it broke through the 50 and then pulled back and did a doji right on the T-line, when it opened positive the next day, what type of pattern was it setting up that we could much easier see? You can see we were in a J-hook pattern. That allowed us to stay long and get ready for the next wave to the upside. And there's our big long-legged doji, bullish confirmation. And what was our confirmation? One, that it was confirming the signal, and two, was closing above the T-line. If it traded positive from there, what was it telling us? It was confirming all this and telling us that this resistance wasn't going to act as resistance anymore. How long do we hold this one? Until we see a sell signal and a close below the T-line. And part of that added confirmation is, look what it did yesterday. Came right down to the T-line and bounced back up. Why did it bounce here? Not because everybody has the T-line on their charts. It's because that's kind of a natural support level, and told us when they bounced and took it back up that the bulls are still in control of this price move. National Vision's, I always tell about my buddy who got a venereal disease in his eye, but that's because he was looking for love in all the wrong places. IMMR. Where did the buying start back up again? There's our J-hook pattern. What's this pattern? This is our classic pattern, a fry pan bottom breakout, and now a J-hook pattern setting up. You thought you were just going to get your money's worth looking at charts. Slow curve. We recommended Tile Shop. We recommended down here because look at your Morningstar signal and a close above the T-line, and what type of pattern was it setting up? There's our scoop pattern. What was confirming it? The fact that we had a buy signal and a close back up above the T-line, and we could see this flat handle. That told us we probably had a slingshot effect about ready to occur. So having all that visual puts us in the right place at the right time with a much greater degree of probability that human nature is working the same way time after time. There's our gap up, close above the T-line as well as the 50. This one's been working out very well for us. Where did we think our target was going to be? Probably right back up into the trajectory of this trend right here. Diana, I've got those. Don't worry. I've got everything that we will probably be looking at over the June 2nd, 3rd weekend. This is just kind of a cliff note version of how to use the T-line effectively. Look at our bobble breakout on our recommendation on DSKE. And notice what is our next criteria. There's not only a bobble breakout, but look at the bobble. Where did it support? Right smack dab on the T-line, which told us the next time they came up through the 50, giving us a bobble breakout, we had an extremely high probability it was going to head higher. Iridium, there was our gap up. Anytime we see a gap up, especially through the T-line area, that tells us there's going to be some more strength. Whiting will be one of the ones. I've got these all some semblance of order. This is kind of your look at your wedge formation breakout. How long do you hold on to this one? As long as it stays up above the T-line. Reggie. Reggie, a fry pan bottom breakout. How long do you hold on to this one? Until you see a sell signal. And we haven't even really had a sell signal yet confirmed. And notice, excuse me, one of the added benefits of having the 3T line on your chart is if they're staying above the 3T line, let alone the T line, that tells you there's still a lot of bullish force, even more so than just riding along the T line itself. CLSD, another one that had a nice pattern to it. breakout right here, how long do you stay in this one? As long as it stays above the T-line. And the reason I keep saying that over and over is you don't have to guess. Something's ringing here. What is it? Still a good buy in Reggie. If you're buying Reggie, it's on the basis that it might be doing a little J-hook. I'd rather pay for it as it breaks out through this level. RETA came out of this fry pan bottom, did a J-hook right smack dab off the 200. Big left-right combo. So even if you miss this move, you know what the magnitude of this move is probably going to be. The same magnitude as wave 1. And how long do you hang on to this one? Until you see a sell signal. And again, the further away you move from the T-line, the more you want to keep looking for that sell signal because that's where the probabilities are starting to go in your favor. Here's a case where you had a gap down through the T-line. What do you do with this one? You just stay short until you see a buy signal and a close back up above the T-line. T2, same scenario. There's your best friend signal. Look at what was telling you the bears are taking control. Look how far away you were from the T-line in the overbought condition. So what's our simple stop loss process? Well, if it opened up here and we owned it, we just put our safety stop right here at the open of the previous day, because logic says if you're that far away from the T-line and there's enough selling strength to come back down through that level, where do you think the next target's going to be? Back to the T-line. You can always buy it back if it starts coming back up, but the fact that they closed it, did a best friend signal, a doji, and a close back below the T-line, that tells you the force is now to the downside. You look for your next target. In this case, the 50-day moving average. Abdul, hang on to your individual requests until we get to the end. I'll tell Jim to do the double line, and you can type it in. So if we're looking at patterns, yes, move the stop loss. Obviously, the further a stock goes up, the higher the probability there's going to be a reversal. So if I've got something that's moving up steadily, I pick a spot that says this is not where the bulls are still in control, and that's very simple. John, I don't know, would you have a cat? So there's a nice J-hook pattern. What adds credibility to this J-hook pattern? Notice when it pulled right back here to the T-line. You must have a cat like mine. Got a big, huge house, and she just wants to sleep on my keyboard whenever her mother's not here. Yes, so we do trailing stops, but that's when it gets up in the overbought area. So, and again, notice how we got additional confirmation that this is a J-hook pattern, because when they got back here to the T-line, they were trading very indecisively. And that's why we recommended this one today, because if it started trading positive, we could see the J-hook pattern. So what's our upside potential? Well, if this is kind of wave 1, wave 3 could take us all the way up here. While we're here, we'll take a look at the biggies. Same analysis. Apple. Wouldn't be a buyer of it right now, but you can see how it's setting up. They can't really close it below the T-line. So I've got a wave 1, wave 2. If they start breaking this out to the upside, we've got wave 3 that could be the same magnitude as wave 1. Notebook, all right. Amazon, also setting up. You can see what's happening in here. Slow curve. You had a big bullish engulfing yesterday. And notice what it did today. Again, if you just kind of realize that this T-line is not on everybody's charts, and look where the Amazon came back to today, right back to the T-line, and then bounced back up again. NVIDIA, so this makes, if you're a day trader, if you're an options trader, this makes trading very much more simple. All right. So we know what a doji sandwich will look like. If they open this positive, we've got the potential of another candle magnitude of this one. So even as a day trader, if it opens positive, you can be buying with the anticipation you'll get that percentage move. Why is this a compelling chart? Well, first of all, you've got a bullish engulfing. In this case, it did bounce off the 34. It closed back up above the T-line. Then today it did a doji. And where's this doji occurring? Right on this resistance level. So if it opens positive, our simple rule of the doji says it's going to probably trade positive, and more than likely it's going to do a doji sandwich, giving us not only a good strong day, but setting up for a J-hook pattern. If you got in the next day, what is our, with that explanation, Jack, what are we expecting to happen on a positive open? That it should be moving positive. What don't we want to see? Well, if it opens positive, it shouldn't come back down through the doji, because that would tell us the buyers aren't there. Yeah, which is basically the T-line. So if I bought this on positive trading, and then all of a sudden it started heading in this direction, that's exactly what it shouldn't be doing. So what would that be telling me? That'd be telling me that this downward resistance level is still acting as resistance. And it's not doing what it's supposed to be doing based upon what we suspect should be happening based upon normal candlestick patterns. So we bought Nugget today, again, because we had a bullish candle. There's your left-right combo. There was your close right on the T-line. When I see something close right on the T-line, it makes the trading very simple. If it's a buy signal and it opens positive the next day, what's it telling us about the T-line? The T-line's not acting as resistance anymore. So where's our first likely target? Probably testing this downward trend channel. Where's our next likely target? If it breaks through there, notice what's happened. They came up, used the 50 as a support, came up, used the 50 area as support. If it's trading positive, where do you think the next target's going to be? Up at the 200. On NVIDIA? No. Remember, we're buying the signal. The number one criteria for candlestick analysis is the signal itself. If this starts trading positive, what do we got setting up? Another J-hook type pattern. So the stochastics are, again, this is our number one criteria. If they start trading this positive, what do you think is going to happen to your stochastics? They're going to start curling back up. What makes a left-right combo? A left-right combo is a doji type day. Let's see, did we just do a left-right combo? Forgot. Left-right combo is a doji followed by a bullish engulfing signal. That doji is that little indecisive left jab. The bullish engulfing is that big roundhouse right, telling you exactly which way the investor sentiment is going after that. Tesla, what's this one telling us? You're in a downtrend. You had an evening star signal up here at the 50. The next day they closed it below the T-line. What do you do with Tesla? At worst, you're short. Why? Because they haven't been able to close it back up above the T-line. Netflix was the best looking out of the biggies, because you can see where it pulled back to. Right back to the T-line. and did a morning star signal, now where are you? You've broken out through this resistance level, telling us there's probably more upside. In Labu, where did this support? Right here on the T-line. There's your little left-right combo again. Remember, when we do our quantitative training, the left-right combo is probably number 2 or 3 ranking as far as the high probability, high profit trade setup. So anytime I see a left-right combo, I'm taking notice right away that there's a good possibility they've changed direction. Now, AK as far as low, that's up to each individual. Low, as you can see, had a kicker signal, still moving higher. So that's what you have to look for yourself to see whether the percent move, there's a little gap right here. The percent move is better for lows or for nuggets. And that's a case of looking at your options and seeing which ones have the best percentage basis to it. Okay, don't holler. I don't ever holler. But on something like NVIDIA, it can trade below the body of that doji during the day, but just don't close below it. Yeah, it could come back and trade a little bit. I wouldn't want to see it do that. If it opened up here and is trading here, it's probably a function of the market maybe selling off, and it's not doing the right thing. So if I bought it here and it started trading down here, I'd close it out. Now, if it turned around and came back up through the open, I'd buy it back, telling me I'm heading in the right direction. Yeah, so that's the nice thing you have is when you look at each one of these charts, at least you have a game plan. And Jack, don't ever worry about asking a question. I tell people this isn't like little Johnny's Boy Scout troop where they were hiking through the woods and little Johnny was asking the Scoutmaster question after question. And the Scoutmaster finally said, all right, the next person that asks a question that doesn't know the answer is going to have to wash all the dishes at dinner night. So they walked along quiet for a few minutes. And then little Johnny said, oh, Scoutmaster, how does a squirrel or a chipmunk dig a hole in the ground and not have all the dirt at the top of the hole? And the Scoutmaster said, I got him. And he said, all right, Johnny, you answer that question. And Johnny says, well, he starts at the bottom. And the Scoutmaster says, how does he start at the bottom? Little Johnny says, well, I think that's your question. So don't be afraid to ask questions in here. That's what everybody's here for. Let's see. Would you recommend next day confirming the T-line is crossed? Would you recommend next day confirmation after T-line is crossed on the close? Would you recommend that? John, restate that. Tesla, if it opens down after 2 dojis, is that a best friend combo? No, that's still just still heading in a downtrend. Anise, no. This methodology is for any time frame. This could be a 1-minute chart. This could be a 10-minute chart. I trade futures during the day, usually off the 10-minute chart. And if I get ready to buy or sell something, I'll flip down to my 5-minute chart and even my 1-minute chart to see if the 10-minute chart is still going to be confirmed. Do you have any of your candle formulas in Canadian software? Oh, it's in all software, or not all software. A bunch of the different scanning softwares like TC2000, Metastock, Ninja Trader. I'm pretty sure they're on Thinkorswim, TradeStation. Yes, the formulas are all there. I mean, you can find the formulas right on our website. Yeah, you don't need a big account in these. All you need to do is trade the size of positions that you're comfortable with. Okay, did we do Labu? Okay, so what we're looking for with the benefit of Candlestick and the T-line is, where's our J-hook pattern? This is our classic pattern, NTLA. Came up, pulled back. What did we have right smack dab on the T-line? A left-right combo. What's our game plan for this one? If it trades through the highs, breaking out, what can we calculate? That we're probably in wave 3, this being wave 1. CTSO. How long do you hold this one? Well, you might have taken profits here because where do you think it was going to come back to? The T-line. And you could be buying it back once you see that the T-line is holding up. Triple T combinations of timing, trend analysis, and the T-line. Okay, that's what the Triple T is. Timing, trend analysis, and the T-line. Thank you, Jim. So what's anticipated from here? Well, if this is wave 1, wave 3 should be the same magnitude. Fossil. Big breakout. How long do you hold on to this one? Notice what it was doing. It was slowly coming back to the T-line, and once it hit the T-line, they were buying it again. Not because they were buying off the T-line. That was just where natural buying occurs. So if we got something like this, where you can see the bottom, you can see the Morningstar type signal, and what's our basic rule of candlestick signals? The bigger the signal, the more compelling there's been a change of investor sentiment. Where's our next likely target? Well, there's a gap right up here to the 50-day moving average. What is our buying strategy? Well, we want to see it open positive. If it opens down here, what's that telling us about the bulls? They aren't there. You don't get into the trade until it comes back up through that level. So if it opens positive, that's confirming the signal and the fact that they're staying above the T-line. What's our stop loss? If it opens positive and closes back below the T-line, who's winning? The bears are still in control. You close out the trade. Notice what's happening right here. This is what we call our bobble breakout. Look what happened right here at the T-line. They couldn't get away from it. Morningstar signal, bullish engulfing. Now a close right on the 50-day moving average. What's our analysis of a bobble breakout? Well, if they open this positive, you don't have to wait around to see if it's confirming. The probabilities are pretty strong that this bobble breakout is working. You're going to have more upside. So you're buying early. This is why you want to be acknowledgeable of the different patterns. If you're buying right here, what's your expectation? That we've broken through on a bobble breakout, our next target is up here. That also helps you in the sense that you're in early, or if this fizzles and closes right back here, you're right out again with a very small loss. And that's, again, remember the whole concept of investing is all the money managers tell you to cut your losses short and let your profits run. But in 40 some odd years of investing, I've never heard a single one of them tell you how you cut your losses short and let your profits run. Well, candlestick analysis does that very easy with just simple strategies based upon the candlestick formations. A bobble is where it comes up, hits a resistance level, bobbles back here, and then comes back up through the second time. Can you please talk about the trading room and timings at the end? The trading room is open every day. We usually have 145, 160 people in there. We also have an options trading room and futures trading room combined. And it's got two benefits to it. One, you've got a lot of people in there that know how to identify good-looking charts, so it gives you charts to analyze. And two, if you have questions, it's a good place to ask questions, so it kind of accelerates your learning process. That's right. And there's kind of your bobble breakout. Notice it came up, failed at the 50, pulled back to the T-line, and then came up through again. Where's your next likely target? There's where your gap starts, right up here at the 200-day moving average. Now, when I say that, at least we have a prospective target telling us, all right, we've got at least a 15% upside potential on this. There's going to be a lot of good-looking charts, but if you look sometimes at a chart like this that might be reversing, well, if it came back up, you may only have a 3% move to it. There's no sense getting into something that you're going to make 3% on when you should be moving those funds to something where you've got the capabilities of making a lot more money based upon the same chart patterns. End tap, there's your big left-right combo. And where did it occur? Right here at the 50-day moving average. So what's our strategy? Well, if this opens positive tomorrow and starts trading up through the T-line, you want to be a buyer because this was your big reversal signal. And where do you think your next likely target's going to be? I think I could do this gracefully. If that's your upward channel, that's your bottom channel, your next target probably is going to come back up and test the top of that channel. Let's see. Yeah, Jim Jones. Yeah, all the products. We got some very sophisticated products. We've got flashcards. We've got a mouse pad with the 12 major signals on it. We've got a 2-foot by 3-foot glossy poster that every American family should have in their living room. I'm sure we've got end tap. Yeah, you could consider it a belt hold. So you got a belt hold, bullish engulfing, left-right combo. When they gap way down here, and I'm sure the volume was big today, what's that basically tell you? That when they came back up, they were wiping out a lot of sellers. Yeah, of course the poster is suitable for framing. So you've wiped out a lot of sellers. That means any buying from there has a lot less resistance in the new uptrend. So Beastie, bullish engulfing, right smack dab on the 50, and look where it closed, right here on the T-line. So what's a very high probability strategy? You can see you're in an uptrend. If it opens positive, what's it telling you? First, it's telling you that they're confirming the bullish engulfing signal. And second, it's telling you the T-line's not acting as a resistance anymore, that this becomes a very high probability trade setup. So the T-line is very effective for keeping you in a trade. It used to be, now notice how Whiting started with a kicker signal up through the T-line. It used to be that if I saw something like this, without the T-line on here, or saw something like this, I'd take profits, thinking, I'll get back in it if it turns back up, but usually I've taken that money and gone on to something else. Now I can sit here and say, all right, this isn't good. What do I need tomorrow? It needs to open positive and trade positive. After that, you don't have any problems making a decision. You don't. You stay long until you see a sell signal and a close below the T-line. Well, notice what happened. Where was the logical place to have your stop loss? Up here in the overbought area. Let me make this bigger. Where do most people buy? And this is where the logic of candlesticks will help you understand what goes on in a price trend that most people, I say most people think the opposite way. That's why the signals work so effectively. When they gap it up in an overbought condition at the end of a big uptrend, what do you think is going on? Got exuberant buying. When is it time to start looking for a sell signal? When you start seeing exuberant buying at the top. So where was a safety stop? Right here. If they were still traded up, nothing to worry about. But if they could bring it back down through this level after gapping up in the overbought condition, the probabilities are pretty strong they're going to bring it back to the T-line. But now notice what's happening. They haven't been able to close it below the T-line. What's that tell you? This might just be profit taking, that you stay long as this continues to the upside. So if you're an aggressive trader, you would have stopped out right here, and then maybe you start buying back if it can proves that it's not going to go below the T-line. So that would have given you a little bit better trade, but sometimes you're buying back up here, and all that was the amount that you missed out on was insurance that you weren't hanging on to something that was heading all the way back down in this direction. Felix, it's when you're comfortable with buying it back. If I stopped out here and I saw this, that's not convincing. Opened lower today and closed here, I wouldn't be back in. But let's say it started trading back up above the highs of the last couple of days. What does that tell me about the T-line? That they're supporting on the T-line, I can start buying back at that time. There'll be some days where it opens lower, I'm thinking it's going to the T-line, I take my profits, comes down, hits the T-line, comes back up through the open, I can buy it right back, because when I sold it, which way was it heading? It was heading in this direction. When I bought it back, which way was it heading? It was heading back in this direction. It was telling me they weren't closing below the T-line. So everything that you can do, or as far as setting up, taking profits or getting back into a trade, is all based upon pure logic. Oops. All right. Oops. Now I got this little thing on here. So this one hasn't closed below the T-line. We have had big profits in CRZO ever since the bobble breakout. And notice how the bobble breakout occurred. There was a little doji. This is what we call the T-line crunch. This is one of the aspects that we'll be looking at that is a high profit trade setup. Notice how once they hit a resistance level, they couldn't close below the T-line. When they gapped up through, look at the doji gap up. What's the number one strongest signal? It's the best friend, which is a doji followed by a gap up. A doji followed by a gap up through the resistance level, what'd that tell us? So it's going to be more upside. How long do you hold on to this? Until you see a sell signal and a close below the T-line. I'm not trying to buy at the absolute bottom. I'm not trying to sell at the absolute top. I'm trying to get that fat part in between. The more correct trades that you have, the higher your compounding effect is going to be. Let's see. I better see if I can. When a stock hit stop loss and recovered, when is it better? Okay, we did that near the top. Yep. So here's another element. If you're up here in the overbought condition and they gap it up, there's just a very simple rule. If they're starting to take it up, you put your stop at where it opened, because logic says if they come back down through there, that was the exhaustion at the top. If they open it here and start immediately selling it off, you put your stop at the previous day's close, because logic says if there's enough selling pressure to come down through the previous day's close after gapping up in the overbought condition, that's where the profit taking was starting. This was in the overbought area for a while, yes. But remember, we're not buying stochastics. We're buying price. Stochastics just tell us where we are in the trend. So if we see a candlestick sell signal in the oversold area, it doesn't mean very much. If we see a candlestick buy signal in the overbought area, it doesn't mean very much. We're looking for the sell signal in the overbought area. We're looking for the buy signal in the oversold area. AK, I bought the stock and the options, but I cleverly closed out the options right here, figuring that was going to be a reversal, and I didn't want to lose more premiums on the options, and then bam, they took it right back up. So I sold too early, but one of my trading strategies, which we will be going through a couple weekends, is worst case scenario, I could have sold half here. Then if it opened positive the next day, all right, I didn't have as much of a position, but I was still making money. Or the next day, if it opened down here, I sold the other half. At least I knew I got most of that trend. Ideal is to buy when the three, again, that's the three crossing the above the 8 is one confirming indicator, but it's just a confirming indicator. It's not a basic indicator. Okay, I've got a few more here that we know. So the oils were good. So you're riding the oils. When is it time to get out? When you start seeing sell signals and a close below the T line. That was ESV. Why were we in? Because you had your J-hook pattern. What were the sell signals? Your long-legged doji shooting stars in the overbought condition. When was the sell? When it opened lower. Remember, it's going to move in the direction of how they open after a doji. SRCI, same scenario. Bearish engulfing, opened lower. Where was it heading to? At least back to the T-line. It was time to take profits. Somebody was asking today in the chat room, isn't Intersat overextended? Well, what's our criteria? You just stay long until you see a sell signal and a close below the T-line, or if you start moving too far away from the T-line in the overbought condition, get ready to start taking profits. Darn. Can't even read my own handwriting. That's just a fine howdy-do. HLX, another one that had a nice 45 degree until we saw the bearish engulfing signal and a close below the T-line. So again, this is not rocket science. This is just identifying what the Japanese rice traders have provided for us over 400 years of observations of what happened in human nature. This one is pulled back, but notice the nature of the pullback. Very indecisive. But where's our safety stop? Right down here. If it comes down through there, we're out of the trade. What started this trade? The strongest of all those signals, the kicker signal. Let's see, we did those two. Mplex. Same scenario. Look how far away we started moving from the T-line. That's when you could go to your 10-minute chart. So instead of getting out here, you might have been getting out up here based upon what your 10-minute chart. How do you find these? Very simple scans, Milton. Depending on which scanning software you're using, all you have to do is just put the formula in and each day refresh it. I can find out of the 10,000 trading entities that are out there, it takes me maybe 4 or 5 minutes a day or each afternoon to find the best trade setups. If you're still learning, it may take you 20 minutes to come up with the best trade setups. So look what happened up here. Look how far away you moved from the T-line. That's when you would have flipped to your 10-minute chart. There's your bearish harami. There's your close below the T-line. If you went short, you stay short until you see it close back up above the T-line. And I keep illustrating all this on the basis that I have much less apt to get jiggled out of a position before I should, based upon using the T-line as my parameter. So if I've got 10 positions on, and 4 of them are steady eddies, I know I don't have to spend very much time analyzing. All I have to do is look at it and say, as long as I'm above the T-line, I stay in it. I don't have to worry about it being a something that I have to put a lot of analysis in to see what I want to do the next day. Same scenario on GWPH. Nice steady eddy, just staying above the T-line. And we were buying NVTA on the basis that, look at our belt hold signal, and remember what the belt hold signal illustrates. They've wiped out a lot of sellers. And where did it close? Right back up above the T-line. Open positive the next day. What's that telling us? That we've got a J-hook pattern setting up. And if we got a J-hook pattern, where do you think the next move is? Well, if this is wave 1, the next move is likely up here to the 200-day moving average. Now, so the question is, which we get a lot in the chat room, what do we do up here? We watch to see what it does here at the 200-day moving average. If it blasts through, it tells us they aren't taking profits here. It's still heading higher. If it hits it and starts trading off, it tells us that's where everybody's taking profits. You take your profits, and what's the worst case scenario? It turns around and comes back up through. You can always buy it back. A belt hold is when it gaps way below the trading range and then comes back up into the trading range. They call it a belt hold because the Japanese rice traders explained it as the 2 sumo wrestlers fighting. One's trying to back out of the ring. The other one grabs his belt and pulls him back into the ring. What do you use to find stocks setting up? Again, the scans. I mean, the most simplest of all scans is looking for the stocks that had the biggest percent price move today. And if my trading universe, which is stocks greater than 5 and trading more than 200,000 shares a day, probably within the first 20 stocks or first 20 charts that I look at, I'm going to find probably 3 or 4 of the best trades for the next day, because they're the ones that probably have come up where you can recognize the signal and then the bullish confirmation of that signal. Oh, yes, somebody's asking. Becky, do you have the link for signing up for the 2-day T-line training session? There you go. There's all the details for that. And the reason I push it so strong is when you use the T-line in conjunction with with the candlestick signals, it dramatically improves your ability to see what to do on the next trading day. A close on best ink bullish engulfing signal closing right on the T-line. If it opens positive, it's confirming my signal, bouncing off the 50 and telling me the T-line is not acting as resistance anymore. NRG, kicker type signal up through the T-line. What's that tell us? Probably we have a J-hook pattern setting up with the start being the strongest of the candlestick signals, the kicker signal. Yes, I put out 2 or 3 stock picks every day, not so that people have stock picks, but I put it into a video format so you can continue to learn why those positions are being recommended. On average, how many positions do you typically have in your portfolio? I try to keep it at 10. Now, the worst thing that most people have as far as their investing is their own emotions. So, through the years, not because I'm any clever guy, I just have to keep my own stupid emotions out of my trading, that if I've got a portfolio, I'll say, all right, I'm going to have 10 positions on. Let's say whatever size portfolio you have, let's say it's $250,000. I know that each one of my positions is going to be $25,000 because I see so many people that have positions on where out of $250,000, they've got a $40,000 position, they've got a $28,000 position, they've got a $5,000 position, and they've got a $2,000 position. You can't figure out what your rate of return is if you've got that diverse amount of money in each position. What happens is it keeps me from saying, oh, this is the best trade in the world. I'm going to buy, instead of $25,000, I'm going to buy $50,000 worth of stock because this is really going to work. Now what have I done? I've put my own emotions into my trading, and if you've got a position where you've put a lot more money in than your normal position, where do you think you're going to spend most of your day analyzing or watching? You're probably going to spend 80, 90% of your time watching that one you've got a lot of money in and not paying attention to the others. Then what happens is it doesn't work. And you sit there thinking, oh, no, my analysis was that this was going to work. I'll give it another day or two to see if everybody else catches on. And now you're selling it 3 days later than what you should have. But instead of saying, oh, this unit of my portfolio didn't work, close it out and move on, you're now saying, oh, man, I knew this one was going to work, and I've got to get rid of it now, but I've done it 3 days later than what I should have. Yes, so Jack, in the chat room every day, after I put the recommendations in the night before, I'll come in the next morning and we'll see how those recommendations are opening. And then I usually come in for about an hour around lunchtime and another half an hour near the close. Or if we see something interesting during the day, I'll come back in and we'll go through it. Have you ever thought about making your Candlestick books e-books? Jack, I did at one time. I don't know what happened, though. OT, no. Not more than 2% loss of your trading capital. No. There's people that say, oh, you should close out your position if you're down 3%, 5%, 7%, 8%. The problem with that is the market doesn't give a hoot where you bought. The only thing that we're interested in is who's in control, the bulls or the bears. Sometimes that means you're getting out with a, let's say, a 0.2% loss. Sometimes you're getting out with a 12% loss. It's all based on each individual chart. So, GR, it all depends on how early I can get to it. Sometimes they're on at 9, sometimes 11 Eastern time. Or the worst case scenario is that you come in about half an hour before the market opens and analyze them then. I think that's about all I got. Oh, one more here that's court. That's just kind of an illustration of you're in an uptrend, it pulls right back to the T-line /200. Notice it came through the resistance level, now acting as support, telling us that this channel is probably going to be breached with this magnitude of the move on the next one. Okay, so are there any other questions? Somebody's asking. Yeah, it's going to be a Saturday and a Sunday on the 2nd and the 3rd. We'll probably start at 9:30 in the morning, and we'll be done by 1, so you can be on the golf course by 2. But the one thing that we'll do is we'll kind of solidify where the signals work. So essentially, if you're trying to trade successfully, you want to figure out how to improve the probabilities that you're in the right trade at the right time. Jim, yes, this is recorded. Do you have training for advanced candlestick patterns? Jim, yes, 2 trainings. One is usually a full 2-day session, and that's where we go through candlestick analysis from start to finish. That's our basic training. But then also, we do private training sessions up at Cuca Lake in New York State in the Finger Lakes. That's where we usually have maybe 4 or 5 people, spend 2.5 solid days in front of the computer, and then our breaks is splashing in the water. We eat at the local wineries, and that's more comprehensive for somebody, because if you have a problem with your investing that you want to get straightened out, instead of it in a kind of an online session where the answer is maybe a 30-second or 1-minute answer, up there we can go into it in much more depth until you fully understand how to get rid of whatever problem you're having, and then we can incorporate it into the rest of the training so that you're kind of getting reinforced with it for the full 2.5 days. Will there be a Mr. B joke telling? No, not in the near future. More info on that is where. That's going to be coming out here pretty soon, Jack. That's sent out to everybody. It's the private training. There should be, there should be videos already on the advanced training. If you will email Abraham at Candlestick Forum, he'll give you the link to those products. So, all right, I guess with that, Jim, go ahead and do the double line. And in 4.1 seconds, do the second double line. Yeah, hurry, because I can't even scroll up. Okay, is this Apache? Anadarko. You should have been out of this. Notice you're bearish engulfing, and then a close below the T line. I wouldn't go short because you're in an uptrend, but I wouldn't be long right now. Conoco, same scenario. All the oils are selling off right now. You should be out of them until they can come back up above the T line. ANIK, that's a good looking chart, but realize that you're in a downtrend, so you've got a lot of overhead, especially here at the 50 to get through. But you got that slow curve breakout. Just watch to see what it does once it gets to the 50. And AEE, that's a good looking chart. Now you have to make sure it breaks through this level so you're getting back up into this trajectory. Stay long on this one. Nutrisystems, stay long. You can see your cradle type pattern, and now you're at the breakout area. Stay long. Put your safety stop at the T line. EXAS. Oops, it's still scrolling past me. All right. EXAS, if you didn't close it out yesterday, it had to open positive and trade positive today. If you did close out yesterday and you like it, you can be buying it back on positive trading from here. L Brands, big left-right combo. You can be buying this one now. Obviously, you want to see it break the 50. Cliffs, you should have been out of this one today. This one, again, anytime you start closing below the T-line, the probabilities are they're heading in this direction. Worst case scenario, you can always buy back if it comes back up above the T-line. I saw LLX. For some reason it's not coming up here. Sorry, Rama. TNDM. You're in an uptrend. You're in the overbought area. You don't have a confirmed sell signal. If I was long, I'd have my safety stop just below today's low. Logic says if it's straight in that direction after a doji, they're probably at least coming back to test the T-line. Whoops, that's not what we wanted. Leggett. Observe the obvious. A doji failure right here at the 34. You should be out of this one. You could even be going short if it comes back down through these levels with the anticipation they're at least coming back down to test the lows. Kara, this is a perfect example. We do a statistical study. This is a case where if you were in a big price move like this, if it opens lower the next day, there's a 90% probability that it's going to consolidate for a while. You close out the position. Worst case scenario is you close it out. If it comes back up through this level, either that day, the next day, or 3 days from now, that's when you can buy it back. Charter, nothing. You had a bullish engulfing left-right combo. What do we need to see after that? We need to see bullish confirmation, which you didn't get. So if I had bought on this day anticipating going higher, meaning today, and it closed back here, I'd be right out of the position because who's in control? The bears are still in control. SRCI, again, closing below the T-line today. If you have a doji sitting right near the T-line, what do you need to see? You need to see it open positive and trade positive, telling you that they're going to move in that direction. C-SPAN needs to stay above the T-line. So you've got a doji sitting right here on the T-line. It has to open positive and trade positive to stay in it. If it opens lower, what's happening? They're going to move it in the direction of how they open after a doji. What's that tell you about this trend? Now it's probably moving sideways instead of breaking out into a J-hook pattern. AutoZone. Oh, that's an ugly chart. So ugly I wouldn't know what to tell you here. I'd be out of this trade for two reasons. You can't tell which way they're wanting to take it, number one. Number two, it doesn't have any direction to it. I'd go someplace else. Remember, the whole point of candlestick analysis is that every chart gives you, or every signal gives you the opportunity to see what the probabilities are. This one I'd be more apt to buy on positive trading, telling me this trend channel is still in progress. But if you see something where there's no direction to it, based upon what the chart is telling you, move on to something else. There's out of 10,000 trading entities each day, you're going to have more good trade setups than you'll ever be able to handle. So back to somebody was asking, do I put picks out? Yes. But part of the whole process is we want everybody to learn how to do their own scans. Because I might put out 3 picks and none of them open correctly. So instead of depending on those picks, you've got your own list which might have those 3 on it, but there might be a couple other positions that are open, opening correctly. So the benefit of having more picks than you'll be able to handle is that now, instead of being able to just get into a good position, you can analyze which ones of those good ones might be the best one to get in. So you're always cultivating your analysis to be in extremely good trades. QCOM, all you can do is stay long. Notice where they opened yesterday, right on the T-line and came back up. What did it tell us about the 200? There isn't any resistance right there right now. MTD, at best you should be going short on this one. Bearish engulfing, and where did this all occur? Right here at the 50 area. Tells you this probably you're heading to the bottom of this trend channel. Let's see, we did Micron, wave 1, wave 2, suspecting wave 3 to come up into about the $65 range. B-cell should have closed this one out today. Bearish engulfing signal, bearish engulfing signal. Who do you think's winning up here? If you stayed long, there's only one reason to stay in it, and that's if they open up positive and trade positive tomorrow. BIIB, you stay long, just like Labu, which is the leverage fund. Looks like it's trying to do a little J-hook pattern. So the biotechs are starting to pick up steam. We reiterated a buy on Tile Shop, because there's your J-hook fry pan bottom, anticipating wave 3 is going to be the same magnitude as wave 1. Northern, you're up here in the overbought area. They gapped it up. As a safety factor, I'd have a stop just below today's low. Logic says if it comes down through there, it's opening lower and trading lower, probably coming back to the T-line. You want to take profits. The Qs, just like the NASDAQ, traded back up toward the, or back up above the T-line, still looking for the possibility of a J-hook breakout. Is this FireEye? Left-right combo, and where is this occurring? Right at the same level it bottomed out before. So if you were short, I would have covered the short when it traded back up above this level, and or if it opens positive tomorrow. If you're aggressive, you can be buying on positive trading, but you just have to watch to see what it does once it gets to the T-line. JB, I don't know what that is. That one's not coming up, Paulette, sorry. CNAT, nothing. You shouldn't be in this one. Reggie, oh, you can. If you're buying this one, it's based on it's breaking out through here, putting you into wave 3. So it needs to see a breakout, and then you put your stop back below the doji, because logic says if it opens up here and closes back here, you're at the top. It's not going higher. APTO. That's a good-looking chart. Just make sure your volume's good on this price stock. But you've got kind of a fry pan bottom. You can be buying this one on strength because it looks like it's broken this little downtrending channel. Not the prettiest chart, but it's all right. And CPST, Capstone, you can buy this one. Again, make sure your volume is good. Western Digital, this is where you're running into what we call the bobble. Came up. Notice what we had here today, a bearish harami right here at the 50. I would have taken profits at that point and just put a buy stop back up here, that if it came back up through, you could buy back in. Silver probably acted strong because gold did. I wouldn't necessarily be, well, if you're buying silver as a trade, you can be buying it. Gold on the, gold did kind of a cradle pattern today, telling you there's probably going to be more upside. That's the reason we started going after Nugget. because it's got not quite a Kratos pattern, but you can see that it's breaking out to the upside. Telephone, this one's just a toughie to trade because you don't have a whole lot of percentage movement. If you like it, you can be buying it. You're just not going to make a whole heck of a lot of money with it. Oops. Murphy, nothing right here. If you had gone short in the last couple of days, I would have covered the short, but also watch for your bobble pattern, which means I wouldn't be a buyer of this until it comes back up through the 50. Notice what happened right here at the 50. There's your evening star signal. If it comes back up through, your bobble breakout's occurring, making your next target the 200-day moving average. BABA. All right, Juan. Yeah, I guess we're getting way past everybody's bedtime. BABA, nothing yet. This is sideways. I wouldn't pay attention to BABA until it breaks out through the 201 range. Somebody said there's a big seller at 200, so I put my buy stop at 201 because if it goes up through there, that means they've taken out that big seller. AVAV, you can buy this one if you like it. It's not your best looking chart, but as long as it stays above the T line, you can stay with it. And CWH, another one that if you were short, you stay short. However, you did a bullish Harami in the oversold area. Makes this very simple. If it opens positive tomorrow, you cover your short position, but you don't go long until you see it close up above the T line. Camping World, right? Couldn't you go short on V-Cell? You could, but here's your analysis. What's your overall trend? Up. So if you're shorting it with the anticipation it's coming down to the 34 or the 50, you just also have to be conscious that if it starts showing support in here, that it's not going to be one of your best shorts. ALTA, here's a very simple one. You probably should be out of this one. If it opens lower, you can be going short. If it opens positive because of the doji hammer, it tells you your uptrend's still in progress. XPO, another one that has to stay above the T line. May not have a big upside, but it's still heading in an upward direction. The Russell, whoops, fat fingers. Russell, as you can see, has stayed up above the T line. Western Digital, is that a scoop? Not really. Usually you want the handle to be bigger than this. This is just wave 1, wave 2, wave 3. Now you've got wave 1. Now you can see if you're going to be in a bobble. Yep. Rama LLEX for some reason isn't working. Yeah, if the Korean talks get started, yeah, gold will probably come back down. Maybe. Tiva, another one that observed the obvious. Once they broke up above the T line, broke through all the moving averages, and look what it did the other day, yesterday. Traded down to the T line and came back up. What's that tell you? That they're not planning to sell it below the T line, that you're still in an uptrend. Urban Outfitters. This one I would have probably been out of yesterday, but if you like it, you can get back in it on positive trading, and then again, just don't let it close back below the T line. Yes, but WTC above the T line, it's in an uptrend. You're in the overbought condition. You're at an obvious resistance level, and you're doing a bearish Harami. What's that telling you? The selling has gotten, or the buying has kind of dissipated. What's the bearish Harami telling you? The buying has stopped. Oh, I missed Steinmart. I thought you were just telling me I was smart. J-hook pattern. If you're buying this one, what would be good confirmation? If it opens positive, it's going to move in the direction of how they opened it after a doji. Notice what they did right here. Bullish engulfing, hammer, bullish confirmation. What type of pattern do you have? A J-hook pattern. Sales world, bullish engulfing, same scenario. Bullish engulfing doji. If it opens positive, what do you got going on? A doji sandwich confirming your J-hook pattern. Oh, dinner on the West Coast. All right. Smarter than the average bear. That's true. I can remember the days we used to watch Yogi Bear. Okay, everybody. Getting the 2 weeks from now, 2 weekends from now, will be a comprehensive training on how to use the candlestick signals, and that training alone will probably improve your probabilities of being in good, successful trades and keeping you in good, successful trades much longer than most people would stay in one. We even had somebody asking today, isn't Intelsat well in the overbought area? Isn't it time to take profits? No, there hasn't been a sell signal yet. So a lot of people, used to be me. If I had a profit, I was just happier than a pig in doo-doo. So if I had a 10% profit or a 15% profit, I'd take the profits. And back then I didn't know enough to let the charts tell me what to do. Okay, everybody, have a good evening. We will see you bright and early in the chat rooms. We'll see you then.